Greetings everyone. In today's video, we are going to discuss how the Nasdaq and the S&P 500 are related to the movements of the NQ and the ES futures. Okay, what we are looking at here is the Nasdaq or the NQ futures contracts, and this is the Z contract for December, expiring December. We're looking at December 15th, 2020. This is a 5-minute chart just to give you an idea. So what we see here is we have a little bit of indecision here in the bottom. This is the U.S. market, about the first half hour of the U.S. Open, which can get a little crazy. So I personally tend to avoid that area until we can get a direction, because as we can see, there's nothing going on, and we see a downtrend, stabilization, and a reversal to an uptrend. So what we want to do is, answer the question, can we look at stocks in the Nasdaq for the NQ and the S&P 500 for the ES futures, and can that help us with our trading of futures? I believe that answer is yes. The first thing we have is this Nasdaq 100 companies list. Now this is from Slick Charts, and I have this other link here we'll put in the video description below. So this is sorted by weight. So we can see the top companies here: Apple, Microsoft, Amazon, Tesla, Facebook, and Google. These are the top companies by weight. It means they have the most pull on these Nasdaq companies. I'd like to focus on just the top 3 just for a moment. I pulled up this graphic here, and this graphic is from CNBC. If we look at Apple being 12% makeup of the top 100 by weight, and the 11.5%, 11.3% for Microsoft, 11.2% for Amazon, just these 3 are taking up about 45% of the weight in the market cap of all 100. Then you throw in Facebook, the 2 Googles, and Tesla. These 7 total are taking up 49%, because all others are the other 51% of the entire Nasdaq 100 index. Keeping that in mind, if we look at these 3 stocks, Apple, Microsoft, and Amazon, and let's go back over here, and let's apply them to a chart that's at the same time frame. So you can see the vertical dashed line here that I have. They're synced up pretty close. Again, both on 5-minute charts. So if we forego this little mess at the beginning of the U.S. Open, and let's take a look and let's plot out. Here's I'm using a parallel channel too, but here's a bit of a downtrend. Would you agree? Such as this. Now let's plot that same area. I'm lining this up here, the same area from here to here for the bottom. And we can see there's not so much movement on Apple in this particular case, but it still has downtrend movements here going on. So we can see how just these stocks can have an influence on watching this NQ. Now we have a little section here of consolidation. So we'll just mark this off. And again, this is just a parallel channel tool I'm using to make it easy. And we mark off that same area here from location. It looks like it's going to about 1155. And let's bring that down. We can see that this is relatively flat. This is relatively flat as well. This is relatively flat. Based on the bottoms here, a little bit down, but we can hopefully you can see that here and here have a correlation. But then we start to go upwards. So let's mark off this channel going up to the end. Now we have a parallel channel here, and let me bring this right to the end. Okay, and let's do the same on the bottom, marking from here to the end. I'm watching the top and lining up the vertical line. And do we have an upward trend? Yes, we do. Now, is it a great trend for down here? Possibly not, but you have to remember that these scales are all they're just there, you know, to change them like this, right? I can change any of these lines. So if you're working at these individually, it may make a little more sense, and especially if I make this on a larger chart, we can see it does make a little more sense. Okay, but what I'm trying to focus and show is the comparison of these. So this is the NQ down, consolidation, and then back up again. Well, the top stocks of the S&P 500 are the same stocks. Okay, so what we want to do is we want to take a look. I'm not going to change the bottom of this. We're going to go back to the top, and instead of using the NQ, I'm going to actually put this on the futures index for the ES, which, excuse me, for the S&P 500, which in this case would be the ES. I'm going to continue to use the Z contract just to keep everything the same. We're looking at the same time frame. We look at the same chart. And we can see here during the same area, if we plot these down here to here, and we extend it, we have our downward. We have, this actually looks like it's a little bit of an upward trend on this one. It definitely is an upward trend. So it's a little bit disjoint here, but this may there are 500 stocks in the S&P 500, so there could be more in the S&P 500 that are helping to drive this up. But we just want to focus on these three. We definitely have the uptrend coming on this side here in the same time frame. Okay, so this is just to give you an example. If you're interested in following the Nasdaq indexes here in these stocks, follow the top 3, 4, or 5 stocks. We can see there's a top 7 of them for the Nasdaq. These top 3 are the main ones. And then in the S&P 500, it's the same stocks. So if you're looking for following the ES versus the NQ, you can use those same stocks. Hopefully this helps make a little bit clearer in the relation between how the actual stocks in the stock market move with the Nasdaq and the S&P 500 and how they relate to futures. You can certainly have a split chart like this, put a couple of other stocks on there. Nasdaq relatively has more of the tech stocks in there, where the S&P 500 has the tech stocks, but also the industrials. And there's a third one, which doesn't pertain to here, that you can use called the Russell 2000. And that ticker for that is RTY. That's the futures symbol to trade that index. And that is the top 2,000 stocks, but those are mainly low cap stocks. And the scale is a little different. The ones over here for the NQ and the ES, they go by 0.25. You can see this changing 0.75, 0.00. They move in 0.25 increments, whereas the Russell 2000 moves in a 0.1 increment. So there are 10 pips or 10 ticks in between each point. Whereas the Nasdaq and the ES, there are 4 ticks or 4 pips in between each point. So keep that in mind. As always, I hope this video helped you out, but as always, keep your risk managed. We'll see you in the next video.